Well, we're just a few weeks shy of the new year, and our next guest thinks 2026 will be a year in which investors will perform well in sectors like utilities, industrials, and real estate. Let's get more on this from Brett Ewing. He is a senior financial advisor and chief market strategist at First Franklin Financial Services. And Brett, thanks as always for joining us.
Yes, thanks for having me, Roger.
Okay, what I'm not seeing there, and what everybody, of course, is talking about, AI. Your thoughts on that? Why are you looking at those other areas? But let's get your thoughts on why you're not too sure about AI.
Yeah, so we just to clear the air, we do like AI. We will stay invested in 2026, but I do feel some of the sheen has been washed off of the AI trade here. I think it's a healthy correction that we've seen in AI. You know, whether the clarity on the debt situation, the clarity on the special purpose vehicles and the depreciation issues. These are all good things to get out there and the transparency of it. Having said that, I do believe there's other areas of the market, interest sensitive areas, that I think are going to outperform on a relative basis. I think the honeymoon is kind of over in that trade on a relative basis. AI has dominated the field over the last 24 months, but there's other areas of the market that are ready to roll.
Okay, and you're not seeing AI go anywhere. And let's talk about you're looking one defensive and two cyclicals. Let's start with utilities. What are you liking about utilities?
I mean, the power demands that are forecasted in this country are record. I mean, it's an amazing amount of energy that we're going to need in order to put all of this AI computing to work. And we just feel utilities are in a great place to expand their operations, and they're doing that actively. And we believe that's a good area. Also, they're very interest rate sensitive, so rates should be coming down. Our forecast for rates next year is a little bit more aggressive than what the market is pricing in. We believe there's going to be over 4 cuts next year.
And with the utilities, any concerns? I mean, AI is tied into it. Any kind of correction in AI, would that have a spillover into the utilities at all, do you think?
Well, we're seeing the infrastructure forecasted to continue in the AI trade, and we believe the utilities, these are long-term projects. They're just being implemented over the last couple of years, and we see a pipeline of that for the next 3 to 5 years.
And taking a look now, the Fed, there's been talk we're going to see a cut. Will we see more after that, do you think?
I do. Our forecast right now is a cut in December, and we believe there will be at minimum 4 cuts in 2026.
And why so aggressive on that? What makes you think that?
I mean, we just had our inflation report come out here this morning. I mean, I looked at one of the largest components in the inflation report. You know, it's a shelter, right? And, you know, if you look at the month over month change, it is 0.01. And we believe that component is going to continue to cool. Across the board, by the way, we've seen cooling in inflation. We think that trend is intact.
And it's still running, though, it's been running about 3% for how long now? Probably, is it closing in on a year and a half, 2 years? We're running around 3%. They've been trying to knock it down. Where do you think it's heading?
I think it's headed south, Roger. I really do. I mean, every leading indicator that I'm looking at with our research team, we do not see inflation being a problem next year. We believe AI increases productivity. Our call is productivity actually increases quite a bit in 2026 as very deflationary pressure, even with growth. So we're in the low inflation camp for 2026.
Okay, and one last note: everybody likes to talk about all the Mag 7 and AI, but you're also looking at some small caps that you're seeing some opportunities.
I do. If you buy into what I'm saying about inflation, if you're buying into what I'm saying about the interest rate cuts, we love interest sensitive areas of the market, and I can't think of a better one than small and mid cap companies as an asset class. And Roger, we've already seen this trend. It's happening already, and people aren't really talking about it enough. The S&P 500 bottomed on April 9th. Since that bottom, we have rallied tremendously in the S&P 500. But guess what's beaten the S&P 500 as of we're sitting here today? The Russell 2000. The Russell 2000 is outperforming the S&P 500 so far, coming out of that big correction that we had back in April. And we think that trend's intact and will keep running. The breadth of the market, our call here is that it expands throughout 2026.
And what's giving you that confidence?
I think lower rates is helping. I think the tax bill's out of the way. The tariff conversation is a fade. And I believe we have good policies right now that are pro-business with deregulation. And it's game on. I mean, I think everyone has incentive to start doing some CapEx investing as we move through 2026.
And with the tariff, I mean, the tariffs are everything up here. What gives you that thing? What makes it look? Let me try that again in English. It's one of those days. It's Friday. what with tariffs? Have people adjusted to it? Have businesses adjusted to it? Do you think? And they're absorbing it, and it's working. They can handle it.
I think so. I think that it's worked itself through the system. I think by the first quarter, we've had a lot of data that hasn't been coming out due to this government shutdown. But I do think by the first quarter, we're going to have a lot more clarity on the effects of the tariffs, and it's going to be you'll be able to quantify it quite a bit more on how it's affecting. But right now, we believe, listening to earnings calls and listening to retailers out there, we believe it's filtered through the system.
Okay. On that note, Brett, we'll wrap it up. Thanks for joining us.
Thanks for having me, Roger. Have a good one.
You too. Brett Ewing is Senior Financial Advisor and Chief Market Strategist at First Franklin Financial Services.